Good morning, and welcome to episode 229 of Getting Rich. I'm your host, Rich Checkan, president of Asset Strategies International, and today is Wednesday, June 18th, 2025. Russia launched missile and drone attacks against 4 Ukrainian cities overnight, suggesting that they are resolved to continue this conflict with Ukraine indefinitely. President Trump is weighing a strike against Iran by the U.S. as he advises Iran to unconditionally surrender to Israel. Meanwhile, both Israel and Iran have traded drone and missile strikes overnight, with Israel targeting a centrifuge manufacturing plant in the capital city of Tehran. Some U.S. data is out prior to the conclusion of the 2-day Federal Open Market Committee meeting here today. U.S. industrial production was down 0.2%, and U.S. retail sales were down 0.9%, the lowest level in 2 years. We saw a bit of a surge in retail sales prior to the tariffs taking effect, with some stockpiling going on, but retail sales have fallen since the tariffs have taken effect. And as I mentioned, we've got the conclusion of the 2-day Federal Open Market Committee meeting here today, where we expect an interest rate decision, and the market absolutely believes that there will be no change in interest rates announced by Chairman Jerome Powell here later today. In the meantime, let's go ahead and take a look at the numbers for the precious metals. Gold had a slight dip on profit taking this past week, while silver surged to a 13-year high. The numbers. Gold is up 1.5% this past week. It's trading at $3,379.09 an ounce. It was $3,330.63 last week. Silver up 2.5% to $37.18. It was $36.26 an ounce last week. Platinum is up 2.6% to $1,296 an ounce. It was $12.63 an ounce last week. And palladium, the lone loser in the metals complex, down 1.5% to $1,075 an ounce. It was $1,091 an ounce last week. With silver slightly outperforming gold, the number of ounces of silver it'll take to buy that ounce of gold, or your gold-silver ratio, is down slightly to 90.89. It was 91.85 last week. And your dollar continues to weaken despite geopolitical crises all across the globe. The dollar is trading now against the basket of currencies at 98.29. It was 99.02 last week. Well, as many of you know, I just returned from Freedom Fest in Palm Springs, California, and there, as anytime over the past few years where I've run into clients and friends, the question is, boy, aren't you making money hand over fist as a metals dealer in this market? We've got gold at new all-time highs, silver at 13-year highs. Business must be good, isn't it? And of course, the answer is no. Business is kind of flat. We've got more retail liquidations than client buys at this point. And as a result, that is reflected in premiums. I don't know if any of you saw the promotion we sent out yesterday with junk silver. Junk silver, one of my favorite methods of owning precious metals. If the premium is low because of the divisibility you get with junk silver, the premiums right now are unbelievable. We're able to buy it below spot, and we're able to sell it to you at spot. That is crazy. It is unheard of. And the reason premiums are so low is there simply isn't demand. There's no better proof that retail sales are down in precious metals than the premiums are low. When people are flocking into the market, premiums rise. They don't go down. And we've seen low premiums for quite some time. The business that's happening is we're seeing people liquidate for a number of reasons. If the stock market drops precipitously, we're seeing people sell off to cover margin calls, the highly liquid gold and silver that they own. We're also seeing people selling off gold and silver to cover credit card debt as they use credit cards to cover their expenses in a tough economy. We're seeing people that are holding precious metals, have held it for some time, either taking profits or selling off the metal to simplify life for their heirs. And we're also seeing some heirs going ahead and liquidating their parents' estates. So a lot of selling going on, and the buying that's occurring is from people that are shopping on bargain hunting. But the premiums are down. That's going to continue to be the case until retail sales pick up. But it's coming, and I am encouraged by the pop up in the silver prices. Central banks don't buy silver, they buy gold. So when we start to see silver creeping up like it is now, that suggests that the retail investor is starting to wake up. And I expect it won't be all that long before we realize that the policies of tariffs and the big, beautiful tax bill, etc., are not going to do anything to solve the problem of our debt and our deficits. It's not going to stop long-term inflation as we combat the debt and deficits with monetary expansion, and it's going to lead to higher prices for precious metals. I think people are starting to realize that. As always, we'd like you to go ahead and subscribe to our YouTube channel, like us, send us your comments and questions. Go ahead and follow us on social media. Take our twice weekly, always something interesting alerts, and our once monthly information line newsletter. But in the end, don't ever forget that getting rich starts with keeping what's yours.